Today we're taking a look at Malaysia's economic outlook. Will the country's economic recovery gain momentum in 2022? And we'll also be taking a look at some of the key challenges. Don't go anywhere. Money Matters starts now. Hello there, welcome to Money Matters. I'm Azaria Tagaya, your host for this week's episode. Thank you so much for joining us on this very first day of the brand new year. A brand new year, but will it mean a brand new set of challenges for the global economy? What's the outlook like for the year ahead? Well, to give us some insight on this, joining us this week on the show, we have World Bank's lead economist for Malaysia, Apurva Sanghi. Hi, thank you so much for making time out of your busy schedule to join us on Money Matters this week.
Thank you, Azaria. It's a pleasure to be here.
It's our pleasure. Well, talking about, it's now January 2022. We've been in this pandemic for well over 2 years now. First of all, how long do you think it will take for the global economy to fully recover from the effects of the pandemic? And also, what's the outlook for the global economy for the year ahead?
So thank you for the question, Azaria. Let me just begin by saying that I'd like to wish your viewers a happy and safe new year. 2021 has been tough on Malaysians world over, and we didn't end on a good note. I'd like to express my solidarity and sympathy with those affected by the tragic floods. Now, on the global economy, the good news is that we expect the global economy to continue recovering in 2022 this year, but at a slower pace. So we expect the global economy to moderate, the growth to moderate to about 4.3%. Now, if you break up this between advanced economies and emerging markets, then our advanced economy projections are about 4% for 2022, which is actually enough for them to recover their pre-pandemic output, therefore sort of completing the cyclical recovery, as economists say. But coming to emerging markets and developing economies, we project growth to be about 4.7% this year. And the recovery will take longer, especially for those countries that are heavily dependent on tourism. Now, you might wonder where Malaysia is in all of this. So we expect the output gap or pre-pandemic output levels to be restored by mid-2022. But the outlook is fraught with all sorts of downside risks and uncertainty.
Okay.
I should also note that we expect China to slow down. Its growth rate is projected to be just over 5%. And of course, that is important because, and notable because China is Malaysia's largest trading partner. So
what is the projection for Malaysia for the year ahead, and what is this based on?
So thanks for that, Azaria. So the projection for Malaysia for 2022 is 5.8%. It's actually the same we had in October. And I have to say that, forecasting growth is tricky in general, and all the more difficult because of the uncertainty that the pandemic has generated. And the Omicron variant is the latest case in point. Now, I have to say that these growth projections come with downside risks. On the external front, slower than expected global or regional growth could affect Malaysia's exports. On the domestic front, the Omicron variant poses an unknown risk to Malaysia's health system, which is fragile. Vulnerable households, so vulnerability could be on the rise because of high food prices, and for some households, high household debt. And over the medium term, and I really want to flag this, the risk of inadequate fiscal consolidation. It sounds a bit nerdy and jargony. Let me just explain that.
A little technical for some.
A bit technical, yeah. So Malaysia's fiscal deficit in 2021 is expected to be 6.5%, which is high. The debt ceiling has been raised. Fiscal policy in Malaysia has been rightly counter-cyclical. In other words, when the economy was going down, the government needed to spend more, which is fine. But as the economy recovers, in order to have sustainable fiscal finances, Malaysia needs to be put back on a path of fiscal consolidation. But that's over the medium term, not right away, of course, where we're still in the throes of the pandemic. But that is a medium-term risk that I would like to flag.
I see. Talking about the Omicron variant, this could understandably delay somewhat the economic recovery process. And also with a lot of borders still closed, what effect do you think this will have on the global economy?
Right. So you're absolutely right. So Omicron could delay recovery. And the thing about Omicron is it's still so new that we don't really have a handle on it. So we don't know if it's less or more severe than its predecessor, the Delta variant. And each day brings different news.
Indeed.
So it's a bit difficult. But I guess what most countries should be doing is to vaccinate as fast as possible, including booster campaigns, put in place testing and tracing mechanisms, ramping them up and preparing the health systems. And, Malaysia, after some trial and error, has built this adaptive capacity. Now, in terms of closing international borders and how that may affect the global and Malaysian economy, well, I guess it's safe to say that the sector that's been most affected is tourism. And I mentioned earlier that countries and emerging markets that are heavily reliant on tourism are quite adversely affected, more so than others, all else being equal. So tourism is a major sector that has been affected in Malaysia as well.
Yeah.
But the upside to that is that domestic tourism has picked up. So even though international tourism has declined, of course, domestic tourism cannot make up for the slack, but it's still somewhat of a good thing.
Yeah.
Especially in the case of Malaysia, as interstate travel is allowed now. And I guess the other silver lining, as it were, is digitalization. So digitalization has taken off in a big way. Malaysia is no exception. So even though borders are closed, if you just think of it anecdotally, and I'm new to Malaysia, I spent about 3 months here, and I find myself heavily reliant on Shopee, on Lazada, on Grab, on the way
as we all are,
the way you and I do financial transactions, and I'm sure your viewers too.
Yes.
So digitalization has taken off in a big way. But if I may, I just want to flag one thing about digitalization in Malaysia, is that our analysis shows that it's mostly the larger firms that are benefiting from this digitalization wave. SMEs, small and medium enterprises, are being left behind. So part of the solution is to strengthen broadband and broadband access so that SMEs can download cloud-based apps and software at that low cost. And the other part of the solution is to keep pursuing issues such as data privacy and consumer protection. Basically, we are in an era of unprecedented digitalization.
Yes.
And this pandemic has only accelerated that. And if Malaysia can address some of these issues, then it does not need to miss out on the initial impetus that it has.
Yes. Well, another factor that we want to look at, Apurva, is foreign investors and how we can actually make Malaysia an attractive destination for that. But that will be coming up in just a moment. We're going to go for a short break. Don't go anywhere. Money Matters will be back after this. You're still with us on Money Matters, and we are joined by World Bank's lead economist for Malaysia, Apurva Sanghi, talking about the global economy for the year ahead. Apurva, before the break, we talked a lot about Malaysia's potential for the next year. But now we want to know about foreign investors, which actually plays a big role in Malaysia's economy. So what factors actually make Malaysia one of the attractive destinations for foreign investors?
So I believe that Malaysia's fundamentals are pretty strong. So it's an open economy in a good neighborhood. And pre-pandemic, in 2019, Malaysia's merchandise exports were the 17th highest globally. It's reasonably well diversified. So half of the economy, services account for half of the economy, manufacturing another quarter, and so on and so forth. So, and just stepping back, it's very admirable how Malaysia has traversed the path from agriculture to manufacturing and now to services. So that's pretty commendable. And it has strong external buffers. So the fact that external debt to GDP is on the low side, 18% of GDP or so, most of which is denominated in ringgit and local currency. The fact that Malaysia has consistently run current account surpluses since the Asian financial crisis. So these are all, I believe, factors that make Malaysia conducive for foreign investment. And of course, underpinning all this is somewhat robust institutions, so which means that there is policy certainty even though there are political changes, reasonable human capital endowments, and good natural resources and commodities as well. So I believe in that sense, Malaysia is very conducive to foreign investment.
I see. Well, with that being said, Apurva, what areas can be further improved upon in order to make Malaysia to continue attracting foreign investors to the country?
Right. So there's always room for improvement, right? In the case of Malaysia, I believe that it boils down to one or two things. It's basically about increasing the investment competitiveness, improving the investment environment. So if you look at the kind of tax incentives that Malaysia offers to investors, I think there is room to be more efficient and more judicious in the use of such tax incentives. So you have to separate out which tax incentives work and which don't. Then in terms of the investment promotion system, I think there's room to improve the delivery of services so that they support the investor to the entire life cycle. So it's not like one-off, you get the investor in and then that's it, you sit back. So the interesting thing is Malaysia has the NIA, the National Investment Aspirations Framework.
Yes.
And it's really, these things are covered and it's really about implementing the NIA, about breaking it down into specific criteria for foreign investors to follow. So in that sense, the NIA is already there.
I see. What are some of the core industries that Malaysia should focus on, especially some high potential sectors for future growth?
So that is a very interesting question. And let me just say that history tells us, not just in Malaysia, but world over, that it's really difficult to ex ante identify core industries or sectors. And if you think of Malaysia's automobile sector in the early years, that's a case in point. So instead of vertical interventions, we're trying to pick winners. I believe that it's much more important for Malaysia to undertake horizontal interventions. What do I mean by that? So we just spoke about investment. So in the case of investment, is using the NIA, the National Investment Aspirations Framework, as a credible guidepost. So it crowds in both foreign and domestic investment. When it comes to human capital, it's reducing the disparities, particularly in education and health, so as to level the playing field. When it comes to digitalization, I mentioned earlier, it's important that SMEs don't get left behind. So it's really about leveling many playing fields and then letting sectors emerge, take off or not, depending on the circumstances. So I think there's much more value added in leveling these playing fields. Now, having said that, if there was one not industry, not sector, but one area where I think Malaysia can proactively do a lot more is the green economy. So Malaysia has a lot of potential on solar, on gas. So basically, basically, taking account of these assets that Malaysia has, and capitalizing on those is one area where I think, or one industry, if you were, that is open to much more proactivity.
Some potential there, indeed. Well, Apurva, we want to talk more about the nation's economic recovery, but it's time for another short break. When we come back, we'll talk about Malaysia and the year ahead, 2022. What's in store for the nation's economy? That will be up after the break on Money Matters. You're still with me, Azaria Tagaya, on Money Matters, and we are talking about the nation's economic recovery and global economic recovery with the World Bank's lead economist for Malaysia, Apurva Sanghi. Well, Apurva, we want to talk more about Malaysia's economic recovery because, of course, we're focusing on the local front as the year begins now. Do you think there's a need for Bank Negara to actually raise its key interest rate from the current 1.75%? And what effects do you think this will have?
So, as far as whether interest rates should be increased or decreased, it basically boils down to two things. One is the economic outlook for the economy, of course, and inflationary expectations. Now, we don't have publicly accessible data on inflationary expectations, so it's a bit difficult for us to ascertain how that might play out. But on the growth outlook, on the economic outlook, as I mentioned, it is subject to downside risks. And Malaysia still has to cover its negative output gaps. In other words, it still has to recover its pre-pandemic level of output, which we expect, all else being equal, to happen by mid-22. So all this to say that it's difficult for us to really say whether BNM should increase or decrease their interest rates. All I'll say is that BNM has had an excellent track record of controlling inflation, and I'm sure they'll make the right call when the time is right.
I see. Okay, so in order to create a better economy, a more vibrant economy, the government may need to focus on some long-term change. So in this respect, do you think that Malaysia needs to create a new approach? And perhaps not one that's driven by ideas of international agencies like the World Bank, for instance?
Right. So let me be the first to say that no agency, no organization has a monopoly over ideas, especially the World Bank. You know, we ourselves are in the process of continuously learning, making mistakes, learning, and adjusting our programs and policies. Now, I guess the value added we offer is sharing lessons learned from one part of the world to another, across sectors and across boundaries. And the current conversation we're having with our authorities on social protection, for example, is a good example of that. And in terms of, the World Bank also defines high-income country classification, and there's been a lot of discussion in Malaysia about whether Malaysia will reach high-income country status or not.
Indeed.
Let me also say that it's a threshold that the World Bank has put out there. And again, the value added of that threshold is it allows apples to apples and oranges to oranges comparison for countries to benchmark themselves against each other.
I see.
So all this to say that, we will work with whoever has development ideas. We will continue contributing. We will no doubt make mistakes, but that is development for you. Development is a game of snakes and ladders.
Okay, well, talking about the high-income economy, how can Malaysia actually move towards that status? So the World Bank actually says that this can be achieved between 2024 and 2028. How can it create some more high-quality investment, inclusiveness, and also human capital to remain competitive? And is there a need for tougher reforms or bolder measures, do you think?
So how much time do we have to answer that one? Well, let me first just say on the high-income country status. It's also a bit of an arithmetical progression, and Malaysia will get there at some point. But I think again, what matters is not whether it reaches a certain threshold, but development on the ground. So, and how Malaysia gets there is equally important. So, if you look at some of the indicators, Malaysia lags. Child stunting, for example, behind its peers, low female labor force participation. So it's not just getting there, but how you get there. Now, in terms of what Malaysia can do, well, let me narrow it down to three areas. On the macro front is really to adopt the Fiscal Responsibility Act and basically entrench fiscal discipline. So without which your resources are not sustainable, and without which you can't do anything else, right? So that's first. Second, focus on human capital. Now, it's interesting that Malaysia's, of the total wealth Malaysia has, 70% of it comes from human capital, as opposed to physical capital or financial capital or natural capital. So safeguarding, growing, managing human capital is really important. And we spoke about education disparities that the pandemic has actually exacerbated over the last 2 years. So they need to be reduced. And number three, I would say, strengthen the social protection system. That's an obvious one, but a really important one. In particular, make it more needs-based and make it more inclusive and less exclusionary. So these are the three things I would say. But I could go on and on, but let me just end by saying that the one thing that underpins any of these three or more things that I could have said is good governance and good institutions. And one critical ingredient in promoting good governance is data. So if you don't have data, if you don't have information, the Rakyat, cannot do their own assessments of how the economy is doing.
Yes.
So DOSM, the Department of Statistics in Malaysia, has made recent good progress. For example, putting out the labor statistics in the public domain. But my point is, the more the better. The more data, more information, more transparency, the better the governance is, the stronger the institutions are, and that affects other things. So let me end there.
Indeed. Well, it's a good note to end on. Apurva, unfortunately, that's all the time we have for Money Matters this week. Thank you so much for spending time with us. It's been some valuable insights shared on the show. Thank you.
Thank you so much, Azaria.
Thank you. And thank you as well, our viewers, for joining us this week. Hopefully you gained some valuable insight on the outlook for the global economy as well as the nation's economy for the coming year ahead. That's it for today's show. I'm Azaria Tagaya. Thank you for joining us, and we'll see you next time on Money Matters.